Welcome to the Deep Dive. A lot of you have been asking about real estate investing, so today we're jumping right into the fundamentals.
Yeah, we've looked at a bunch of material covering different angles, from basic income stuff to more complex strategies.
Exactly. But the mission today is pretty straightforward. Give you a solid grasp of the basics, the core concepts, without getting totally bogged down in, like, every single detail.
Just the foundational stuff. Think of it as building that base understanding of how this whole world kind of works.
Okay, great. So where do we start? I guess the most obvious way in is just buying property.
Right.
A house, maybe a small building.
That's definitely the most direct route, yeah. Residential, maybe even commercial property. But there's another big one people should know about: REITs, real estate investment trusts.
Right. REITs. They're a bit different, aren't they? How do they work?
They are. What's interesting is REITs let you invest in a whole portfolio of properties. It's more like buying stocks, really.
Okay, so instead of one specific building, you're buying shares in a company that owns and manages, like, a bunch of properties.
Precisely. It can be, an easier way to get started for some people, and it offers built-in diversification.
Interesting. Okay, so whether it's direct ownership or REITs, how does real estate actually make money for the investor? What are the main drivers?
Well, there are really two primary ways. First up is rental income. That's the cash flow you get from tenants paying rent after you pay your expenses.
Cash flow, basically the money left over each month.
Exactly. The money in your pocket after the property's bills are paid. And the second way is property appreciation.
Which is just the value of the property going up over time.
Due to market conditions, maybe improvements you've made, that kind of thing.
Okay, got it. Now, there's a term you hear constantly, leverage. What's that all about in real estate?
Leverage is, well, it's usually about using a mortgage, borrowing money to buy the property.
Right, so you put down some money, but borrow the rest to control a much larger asset.
Yes, exactly. And that's powerful because it can seriously amplify your returns if the property value goes up or you have strong rental income.
But I imagine there's a flip side.
Absolutely. It's a double-edged sword. Leverage magnifies gains, but it also magnifies potential losses if things go south. More risk.
Right.
Yeah.
Bigger reward potential, bigger risk. Makes sense. Are there other sort of perks to investing in real estate? I feel like I've heard about tax advantages.
You have. That's correct. Real estate often does come with certain tax benefits. We won't dive deep into the tax code today, but it's definitely something to be aware of. It can significantly impact your overall returns.
Good to know. Okay, so thinking about that rental income stream, for someone considering becoming a landlord, what are the maybe less glamorous realities? It's not just cashing checks, is it?
Definitely not. Being a landlord means real responsibilities. You're managing tenants, which isn't always easy. You're handling maintenance, repairs, what we call operating expenses.
Things breaking, needing fixes.
Yeah, and you also have to plan for times when the property might be empty vacancies, no rent coming in during those periods.
Right. So how do you even figure out if a potential rental property is actually a good investment? What should you look at?
You really need to evaluate the potential profitability. That means looking closely at the expected rental income versus all those cost property taxes.
Okay, taxes based on the property's value.
Right. Insurance and those operating expenses we just talked about, maintenance, management fees if you use them.
Yep.
You run the numbers to see if it's likely to generate positive cash flow.
Got it. Crunching the numbers is key. Okay, what about house flipping? That gets a lot of airtime.
Flipping.
Yeah.
Yeah, that's a whole different game, really. The basic idea is you buy a property, often one that needs work.
A fixer-upper.
Exactly. You renovate it quickly, and then you resell it, hopefully for a profit. It's a much shorter-term strategy than holding rentals.
And probably riskier.
Generally, yes. It's faster paced. You need to know your renovation costs and accurately predict what the market will pay when you're done. Not always ideal for beginners, perhaps.
Okay, that makes sense. Now, the classic real estate mantra, location, location, location. Is it really that big a deal?
Oh, absolutely. It's fundamental. Location drives so much of the value.
How so?
Well, it affects how much rent you can charge, how desirable the property is to tenants or future buyers, how quickly it might appreciate. Think about nearby jobs, school quality, safety, amenities. It all ties back to location.
So a cheap property in a bad location might not be a bargain at all.
Could be a very tough investment, yeah.
Okay. And finally, just briefly, what's the main difference between investing in residential properties versus commercial ones?
The core ideas, income and appreciation, are similar, but commercial properties like offices or retail shops usually mean different kinds of tenants. Businesses, not families.
And probably different leases.
Longer leases often, more complex agreements sometimes, and the management can be a bit more involved compared to, say, a single family house.
Okay, interesting distinction.
Yeah.
All right, so we've really covered the core landscape here. Different ways in like direct ownership and REITs.
How money is made through rent and appreciation.
The power and risks of leverage, those potential tax perks.
The realities of being a landlord, how to assess profitability.
Plus house flipping, the huge importance of location, and that basic residential versus commercial split.
Yeah, it's a good overview. Real estate definitely offers a lot of different paths for building wealth, but each has its own, things to consider.
And I think that leads to the final thought here. While the opportunities look exciting, and they can be, you really need to go in with eyes open. Understanding these fundamentals we talked about and really understanding the risks involved is just crucial.
Couldn't agree more.
So as you think about maybe taking a next step, really consider which of these areas sparked your interest the most today, and maybe start digging a bit deeper there. That focused exploration is probably where the real learning happens.